to escort the speaker onto the dais and welcome him with a floral bouquet. I request members who are still outside to come in. CA Nilesh Joshi has managed effective client services and quality assurance. He has led assurance services for banking and financial services clients, majorly public sector, private sector, foreign banks, reinsurance companies, mutual funds, etc. He has provided consultancy to clients, CFOs in India and abroad in budgeting, taxation, accounts closure, monitoring budgets, etc. CA Nilesh Joshi has conducted special audits for RBI of a public sector bank with special emphasis on inter-office accounts. He has conducted special audit for Department of Telecommunication of a large telecommunication company. Conducted special investigation for SEBI of mutual fund schemes. Conducted forensic audit of spot exchanges. Conducted special investigation of mutual fund schemes, conducted systems audit for mutual funds, insurance, and regulators. He has done process review of leading R&T of India. With this brief profile, I introduce you to CA Nilesh Joshi. Over to you, sir.
Good evening, everyone. So, after having a chat GPT based session, I remember kind of a joke, or I will not say joke, something which I heard few months back, that a very senior person told me that there is a say in older days that around in 1970s, when we were kind of in like a third world country, that the father in US tells their child that eat properly, Indians are starving. Then post liberalization, people saying that in US that to father used to say to son that study properly, Indians are starving for you behind your jobs. And now every father in the world tells their child that be novel, be creative, AI is behind your jobs. So we have reached to that level in India also. So basically what I think I have already shared the presentation, and there are a lot of slides in that presentation which will talk about LFAR. So I will morely focus on the specific areas which need to look into and which needs to report it in LFAR. So basically LFAR comes from the RBI circular of 5th September 2020. Before that there was a circular which was very old, and post that RBI has revised the LFAR to meet the new guidelines and new changing scenario. So the new circular is of 5th September 2020. So what we observe, we are also statutory central auditors, what we observed that the auditors somehow get confused when they are doing bank audit between statutory audit report, MOC and LFAR. So LFAR is not a substitute for statutory audit report or MOC. Like I will give you an example. Let's say some auditor has observed, like last year only we have this experience, some auditor has observed there is a diversion or round tripping of funds within the borrower entities, so that, and they are clearing overdues by doing borrower entities. So he wrote like kind of a essay in LFAR, but he has not made that account NPA. So then we called him and asked him why you not made that account NPA. So then he said as usual कि वो तो overdue नहीं था at the time, it was not overdue at the time when we have actually done the audit. So I have not made it NPA, but I have mentioned it everything in LFAR. So basically we need to understand, though even the account is not overdue on 31st March 2024, but what is happening in that account, because now we are in the era of daily marking of NPA. So on daily marking of any account which is overdue for more than 90 days on any day needs to be marked as NPA from the date on which it is overdue. So if it is getting regularized through evergreening by round tripping or circulation of funds, it should have been marked NPA from the date when he first observed it. So what we keep on saying that it is not a substitute for our independent audit report or MOC. In such case, you have to report in LFAR but also pass MOC. Because we come across a lot of cases where auditors have very nicely done the audit, they have reported very nicely in the LFR, but they have not mentioned it in MOC or passed in MOC. Simple example like provision for expenses. Some large provision for expenses have been missed out by the branch. There they don't pass MOC, they just give it LFR. But actually we are also certifying true and fair financial statement. So if you don't do the financial adjustment, it will not give a true and fair financial view of the statement. Then statutory audit report is a self-contained document, LFR is a self-contained document. So these two are different reports. Statutory audit report more talks about the true and fair opinion of auditors on the financial statement of the branch. LFR if you see the LFR, it talks more on the internal controls. So even before IFC got introduced or CARO got introduced in the companies, LFR was there. So LFR is more an internal control reporting document, and it's not substitute for any opinion which we give in case of a financial statement. So we need to identify the differences between these two and accordingly report that. So few years back, if you see in the guidance note also, there was no reference of MOC around 6 years back. Now after this has been identified, the guidance institute has also realized that we should also give reference of MOCs in the guidance note. So if you see the branch audit report of guidance note, it also gives reference to MOCs. Then matters in statutory report may be elaborated in LFR. So if you observe something you want to report in main statutory audit report, you report it, but it should be elaborated in LFR to identify, and after consolidation report it to the RBI. Then any adverse comment made by the auditor in the LFR, the auditor should consider whether it requires a qualification in the main audit report. See, this is also a case where we found many times the statutory center auditors found that there are certain very serious matters which have been reported in LFR. Maybe something on internal financial control which has been reported in LFR but not reported in internal financial control reports. Or there are certain serious matters with respect to let's say certain short provisioning of the account which is mentioned in LFR but not in main financial report. So please see that the LFR and independent audit report and MOC are going in sync. Otherwise what will happen, if any authority comes to you, if the authority says that branch auditor has reported something which is very serious, which requires an account to be marked as NPA, but it is not marked as NPA by the statutory auditor because it was not there in MOC, then in that case statutory auditor, central auditor has to face music, and he will say I have relied on the whatever branch auditor has signed. So there my role also ends. Then there that hit might come on the statutory branch auditor also. So it is very serious that whatever we are reporting needs to be very crystal clear and to the point. So see, you from your side lot of things are going to statutory branch audit, like there are certain issues related to the policy. I have come across certain audit reports where very nicely branch auditors have mentioned certain comment on the policy or procedures or SOP related matters, but somehow it get lost in the whole LFR. So in such case you can have, there is a on advances, there is a summary of observation which we have to give in the LFR, you need to mention in there. So next is not necessarily every adverse comment in the LFR will result into a qualification or in the main audit report. Therefore auditor has to use his judgment whether every adverse comment in LFR needs to be mentioned in the main audit report or not. Then the details on the LFR should be clear on facts, and the opinion of the auditor is also to be mentioned to the SCA can take a point appropriately. See, this is specifically mentioned because the LFR cannot be written like a essay. It has to be very clear on facts. What we earlier speaker also there with reference to RBI circular, which is which circular has been violated, it should be clearly mentioned, and accordingly then when you compile, you consider yourself in the position of statutory central auditor. When he is consolidating or not LFR but while doing finalization of a zone, there are hundreds of LFRs coming to him. How much time he will get for the consolidation also going through hundreds of LFR. Now many banks have made it automated, so you at least the statutory auditor get an Excel file to go through it. But but if it is written somewhere not in clear language, crystal language and to the point, then how that auditor will be able to consolidate it? And then it will not have impact which you want to create or whatever you identified. The format of LFR is a questionnaire, so it is request that don't mention just yes or no. please mention what you have checked and what is your opinion about it. So it should not be mentioned only yes, 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 we write, or no, or somewhere the branch manager only prepare LFR and give to auditor, and he only writes. It's like a Ghosh Jilani certificate. Whenever we audit, how many of us actually read Ghosh Jilani certificate? Wherever it requires to mention no, everyone writes yes. And we certify, and when it comes to statutory center auditor, he also goes through that. He doesn't have time to go through all Ghosh Jilani certificate. He also goes through certain important branches and mention and give it is complied with Ghosh Jilani. So in some of the branches, 2-3 branches, if it is no also, he has to mention that. So LFR questionnaire, though it is in questionnaire format, the answer should be clear, clear and narrative. Comments should not be vague and should be supported by instances. So sometimes auditors, it's not like that I'm saying all auditors, but some auditors make some sweeping statements as controls are weak. It has to be evidence that when controls are weak is a conclusive statement. But before that, there should be observation to tell on what basis you have mentioned that the controls are weak. And when you are seeing LFR XYZ control is weak, or there is no, let's say maker checker control is not there, you have to correlate it with the internal financial control report. Otherwise, in LFR you will mention maker checker control is not there while creating advances masters. And you have observed that. So that is a basic control failure for internal financial control report, and internal financial control report will be clean. Then what will happen? Means what judgmental call that statutory center auditor will take with such contradicting comments of the statutory branch auditors. So it is request that when we finalize, we should see that all three reports keep together, and then we see that there are no contradicting statements in all three reports. That is one point. And when we start the audit, I personally believe that we need to start the audit by looking at the deliverables. What happens normally when we get a branch allotment letter, first thing we do send NOC. Rather, you will not believe certain auditors even don't see properly that to whom they are sending the NOC. Last 3 to 4 days I have got NOC from branch auditors, though I am a statutory central auditors. So we first see advances, then we calculate our fees, and then we start sending NOCs. That is the normal procedure which we do. So there is a closing circular given by all banks. State Bank of India has very elaborate closing circular. Other banks also give very elaborate closing circular. First, after going through the closing circulars, we need to see what are our deliverables. Like one is the independent audit report, then there is internal financial control report, then there is LFR, and there is plethora of certificates. So many certificates, how much time we have to check those certificates? So when we actually plan our audit, we need to go reverse way by actually going through the certificates, going through the LFR, that what is my requirement which is emerging from the reporting. Otherwise, suddenly क्या होता है LFR, when you actually start signing a certificate, वो stamp मार के लेके आके जाता है, सर ये भी certificate sign करना है. Then we get ये कौन सा, which is this certificate? Then you say this is some export interest subvention certificate. Then that auditor says, अरे ये तो we have not checked it. Then again you go back and checking it. And by that time you are actually running short of time. You will get the calls must be getting you from this journal office, for the branch order. Then he will say, sir, there is nothing in this, आप sign कर दो. This is what practically happens. So it's a T20 match. So we have to play T20 match. Our planning and whatever our deliverables has to be, we should be clear in our mind what should be there. So from the LFR perspective, LFR is divided into 5 portions. One is asset, liabilities, profit and loss account, general specialized branches. So those who get branches which are specialized branches, there is an additional LFR requirement. So let's say those branches dealing in foreign exchange. So those branches with having LC opening, AD1 branches, AD2 branches have authority to open LC, discount LC, packing credit account, post-shipment credit accounts. Those are dealing in foreign exchange branches. Those who are doing one more thing, there is something called LRS, Liberalized Remittance Scheme. So those branches which are involved in Liberalized Remittance Scheme, we should be clear that what are FEMA guidelines, because FEMA guidelines comes in picture. So when you see the branch, when you ask the branch advances कितना है, top advances देना, top borrowing देना, उसको पूछना कि trade finance का activity है क्या branch में. So if you have trade finance activity, you need to know what is this trade finance activity is to dealing in foreign exchange branches, transactions. So you need to get accustomed with that. If last year you may have branch which is not a foreign exchange branch, then in that case we need to update ourselves. What are the requirements with respect to that branch? What are the trade finance requirement, foreign exchange requirement, FEMA requirements? Then there is a branch with dealing in clearinghouse operations. I will come to this branch specifically after some time. Then dealing in NPA recovery branches. These are basically ARV branches. So first, once you go there, whenever you have done everything, there are specific questions which are asked in LFR requirement, which talks about the adequacy of provision based on security and time taken for suit filing. So you need to know certain guidelines or specific guidelines with respect to SURFACE Act, with respect to IBC, which are required. So when you come to know that what kind of a branch you have got, you need to study those guidelines, because what happens is that branches keep on changing every year, and we may not aware with this kind of a branches where these are specialized branches. Then dealing in large advances. So there are certain branches like large corporate branches which are dealing in large advances. See what has happened that as per RBI circular, top 20 branches are going to statutory central auditors. And many banks, including SBI, Union Bank, Bank of India, they have started this concept of SAM branches, stress asset management branches or asset recovery branches. In that case, what happened, they write off the advances at HO level, which is called prudential write-off. But they keep the advance at the branch level. So branch level, you will look at the advance. When you see the total advances, it might be kind of a 10,000 crores. Whereas those might have been written off at the HO level, and the net advance would have been only, let's say, 1,000 crore. But because of the interpretation of RBI, those asset recovery branches are also coming under the statutory central audit area, statutory central auditors. So in that scenario, what happens? The statutory branch auditor who are Cat 1 may get large branches having large advances, and there you are carrying a bigger risk, because you will get an advance. Let's say in case of Bangalore, you get an advance having a large advance of Karnataka Power, or large advance of some other power company or some other government company, state government company, or only single company which is a large company in the Karnataka, Bangalore area. Then in that case, you need to understand what are the requirements for that kind of verification of large advances. Then we will move to each area. So what sir has earlier told in earlier lecture, when you identify what are the reporting requirement of each area or each question of LFR, it can be generated from the CBS. So if you are aware about the command, every report can be 99% of the report can be generated from the CBS, and there are few reports which you can create after merging 2-3 reports of CBS. So CBS, once you understand the command, which we have not given here because that lecture was planned. So what, like case of joint custody of cash, what would be the checking? In this case, the checking will be the cash handling policy key register. Like other case, cash retention limit, there is a ready-made report available in CBS about the excess cash, because it gives. So you have to just take that report and report in LFR. So we need not waste time in those reports which are easily available in CBS. Then periodic checking of cash and ATM balances, or balances of cash and ATMs in books of records, whether they match. These are available in CBS. Also, you need to understand that how the ATM are appearing in the branch. So if the ATM is appearing in the branch, in the GL of the branch, you have to check the ATM also, you have to comment on ATM cash also. If it is not appearing in the GL of the branch, then don't comment on that. Auditor, we are very excited to check all these things, ATM, cash recycler, but if it is not in the GL, we are not certifying that. Why we need to check that? So it will unnecessarily waste our time. Already we have lesser time. Then in case of a balance confirmation, this is typical the way we do in case of any balance confirmation, bank balance confirmation, or any normal audit. So, and reconciliation statement, you have to take the reconciliation statement and see that the transactions are clear. Now, what happens that we normally say that transactions are cleared and verify the reconciliation statements and 15 days. But what transactions have been entered into this cash balance, that needs to be verified, cash account. And as from internal account perspective, you need to check that who has the access to the cash account. It should be actually only to the cashier and the next officer to him who is approving cash. It cannot be to the person who is also handling deposit, it cannot be the person who is also handling advances. So, there should be a restriction on the cash module in the CBS to those PO officers who are authorized to operate that. Then this is not money at call and short notice doesn't normally come at branches, investments also. Now before going to advances, because whatever once we start talking about advances, we will spend a lot of time on advances. Before that, I want to go to an important point, which is now very near to RBI's heart. This is suspense accounts, sundry accounts. These are both sides, asset side and liability side. Now RBI is asking a lot of questions on this to bank also and statutory central auditors also. I only had a meeting with RBI where this question has been asked last week only, that how are you auditing this? Then a CEO normally give that lot of accounts are managed at the branch level, so we will get a certification from the branch. So this is very important area with respect to sundries, inter-office accounts, how it has been utilized. In this case, what happens that we see there was a schedule given by the bank in that closing returns, closing circulars, that one schedule says that more than 6 months, less than 6 months, more than 180 days, and based on that we sign it, we see and sign it. But what we see, the problem is that we see the balance. So on 31st March, we go to 30th September and see whether any balance, any amount related to the balance is outstanding on 31st March. RBI is saying that that is not an interpretation of 6 months. What we are saying is the entry should not be unresponded for more than 6 months. Now it will be very difficult for us to identify which entry is not unresponded. So you need to identify, understand from the branch manager that how they are monitoring this account, how they are responding to the entries in other assets and other liabilities account. Actually what is happening in these accounts that एक लिख खड़ा है other asset में, दूसरा लिख खड़ा है other liabilities में. Because when they have made provision, at that time they have credited provision, and when they are actually making payment, they are debiting other asset account. That could also happen. So we need to understand, first we need to ask him, the auditor branch head, how many accounts are with you, which you have control, and how many accounts are with central office of control. Because today we know that there are a lot of accounts related to RTGS, IMPS, which are controlled by the central office or ATM. These are also inter-office accounts. And you need to ask them which accounts are there, which are handled by you. Then initially we will tell everything is happened at HO. But then you have to inquire with him, okay, to dikao, if it is at HO, and then you open one of the entries, you will realize that the user ID is of the branch. Then ask him on what basis you are saying it is HO, you have only handled this account. Then I'll get the list from him that which accounts they are handling and how they have control about these accounts. How are they monitoring? Processing charges, if it is not collected, locker rent is not collected, where they are parking or they are not charging to the account, or any, in case of any, let's say NPA account, they have collected, they have charged legal expenses. They cannot debit to NPA account, so they have debited to other assets account. Actually, it cannot be debited to other asset account. It should directly get debited to P&L. So when you actually scrutinize this account, you will come to know what entries are lying in this account, and then then you will have a closing circular or circular of all banks have issued, central office issued, for which purpose this account has been opened. You take that circular and see that whether these accounts have been used for the purpose which they are opened, because this is very serious point which RBI is looking at. RBI is saying that these accounts, rather, we have also experienced that these accounts have been used for evergreening of NPA. One case which we come across is that the account as a control, one account was overdue, CC account was other loan account was there, loan account was overdue, and it was going to be NPA. So what that branch manager has done, he has credited that account and debited such other asset, other liability sum of the account. but the control in that account is that by the end that account should be 0. So he has again reversed the same entry at the end. With that, what happened that the account, the IRAC automation software could not, has seen that there are credits, so it has not classified as account as NPA. Actually, this is evergreen, and not only evergreen, this is a fraud by the bank, fraud by the branch manager. So please go through such accounts, and if you find anything with respect to such accounts which require provision, which require that those accounts where such entries are past accounts should be made NPA, please make those accounts as NPA. And if you see that controls are weak in these accounts at the branch level, please, my request is that report in LFAR and also report in IFC. And if you feel that any entry which is not responded for more than 6 months or more than 90 days, you make provision for it depending on the type of entry. And this is rather RBI, next year RBI will start penalizing banks for not having proper control on this account, because now they have come across IRAC, they have done KYC, all things they have now over with that. Now this is the area where they are very serious on this. Even if those who are doing concurrent audit, this is very important area which needs to be looked into. Now we will go to the advances. So advances are divided into 3 portions as we normally, and our audit program should be also divided into 3 portions: credit appraisal, then sanctioning, documentation and monitoring. These are the 4 areas which we need to, which we always see in any kind of advances. So there are, in case of a credit appraisal, what we need to report is that basically correct credit rating has been fed into the system, details of accounts where renewal of short-term loans happens frequently. So when we talk about the correct credit rating has been fed into the system, actually second is that account is getting short renewed, but borrower is not submitting any document. That means the borrower itself is a non-cooperative, he is not giving the documents, and also on what basis you are doing a short renewal of account. So there should not be repetitive and regular short renewal with respect to CC accounts. So short renewal are allowed, they are not allowed, but in such circumstances if they are allowed, they are only once. And if an account, if you come across, like there is an account which is due for renewal on 31st July 2023, they have done a short renew somewhere in month of October, and again they have done a short renew in the month of February. Then if you are, means you have to mark that account as an NPA, then it should be marked NPA from the 31st July, when that short renewal needs to be done. 180 days complete for that short renewal or review of the account, and not from the 2nd, 29th Feb or 31st March. So when you write NPA date in your MOC, short renewal date on which it is actually due, that is important, when it will actually become NPA. See, IRAC automation, whatever automation you bring it, if it is not, it will collect data from the CBS system only. And if the data in the CBS system is itself is incorrect, then in that case, what will happen that whatever captured by any of the system available, it will be incorrect. And accordingly, whatever kind of a software you use, it will going to show a wrong impact. Then sanctioning, credit facilities sanctioned beyond delegated authority. This is a manual thing you have to check. So you have to take a delegation of power and credit policy of the bank, and who has the authority you need to check, and based on that you have to report. Normally you will not get any query in this, but the query could be there is a waiver given or a deferral given by the competent authority. Like that drawdown, means let's say part disbursement has been done, and further disbursement can be done only after getting certification from LI in next 6 months. So when you are looking at this account, you find that LI has not given certificate, engineer has not given certificate, architect has not given certificate, then also disbursement has been done. And there is the deferral or waivers are not kind of a lifetime waivers. If it says that competent authority says that, zonal manager says that it should be taken within 6 months, it should have been taken within 6 months. If it is not taken, and then also the full disbursement has been given, you should mention it in the LFAR. and also see that when such disbursements are given, what is the end use of that disbursement. That way will come when we check the monitoring of the account, but this is a clue that end use is problematic. Loans provided to companies for buyback of securities. Normally buyback is not allowed as per company law. Buyback is not allowed from borrowed securities, borrowed funds. So if loans are provided, that itself is illegal. Means it doesn't have any sanctity with Companies Act also. So specifically we need to comment on this. Then advances issued without necessary documents, so that you can get from loan files. Deficiencies in documentation. These two case advances, simple cases. Now I will tell you vehicle loans. Loans have been given, we don't get that mortgage on the vehicle or hypothecation on the vehicle from the RTO. We keep on mentioning in the audit report, we never get it. So there is a site called Vahan. So you can check, you can put the number there, you get whether it has been hypothecated or not, and you can actually take it as evidence. Then there is a registration of charges with respect to CERSAI. You have to check whether registration of charges is done. Normally what happens that we check that receipt is there of the CERSAI payment. That is not useful. We need to check whether they have generated the search report from CERSAI, and on that there are registration of the property is mentioned and bank name is appearing. Similarly for ROC search report. So what happens that all those people, normally people, the branch manager says that payment kiya hai, what is, we are not concerned with payment. You are concerned whether it has been registered or not. Then analysis of accounts for overdue renewal, aging of account. So you can take list of accounts which are pending. This is a report can be also generated from the CBS. Then book debt statement should be scrutinized. See, if you see, there are command which is there. I have seen that command in that booklet which earlier speaker has shown. There is a command which gives that that you get it circulated. In that it is mentioned that how to check the drawing power and limitary report, LTL, that is called in Finacle. So from that you come to know that what is the stock statement and book debt statement of the borrower for last, let's say 12 months. And if you see that the amount is appearing same for last so many years for the stock and book debts, that means either they have copy pasted it from this earlier, then you need to check and scrutinize the stock statements on detail. If he is submitting same stock statement on every month, or is actually there is some business or not, whether stock audit is conducted or not, that you will come to know from that report. That report is I was just, when he was showing, I just saw that command. So you please get that document, you will get it. And then when you analyze the stock statement, also check that what is the whether it has been recalculated DP after removing the non-moving items, margins, and the debtors which are beyond 120 days or 90 days as per the sanction letter, or the debtors are moving. There is one issue with two banks. One is State Bank of India and Bank of India. They have an argument. They say that we remove the creditors only to the extent of whatever you are not considered at the time of appraisal. So let's say at the time of appraisal they have considered the creditor level of 50 crores. Then they don't reduce those creditors at 50 crores at the time of calculation of DP. They say it is already the loan has been sanctioned, CC has been sanctioned to the extent of lower only to that extent. So if that is the case, you mention it in LFR that this is the method which has been followed by the bank. Nowadays most of the banks have started reducing their creditors, but specifically SBI and Bank of India are still continuing with this practice. So if stock audit is required, whether it is conducted or not conducted, so you need to take a stock audit report of eligible borrowers. Also unit visit report, you need to see whether there is a unit visits have been done by the bank employees, consortium or multiple banking arrangement, dual certificate or report is obtained. So you need to identify which accounts are solo banking, which accounts are multiple banking, which accounts are consortium banking, and accordingly your verification will change, because in case of consortium banking what happens, the lead bank enter into all documents, then you will not have the documents. In multiple banking, everyone has to enter into a documentation. So whether you are entered into a loan agreement, and if it is entered into, then in that case whether the mortgage has been confirmed by the lead bank or the other bank whom the mortgage is already done. Then physical inspection of or securities, charge and details if substantial deterioration value of security. So RBI Master Circular, when we check that valuation for every 3 year is for NPA accounts. What happens that auditors normally write that valuation was conducted for last 3 years. Actually, that is requirement as per RBI circular for NPA accounts only. That is not for standard account. And if the bank has their policy to value property or immovable or movable security every 3 years, then it should be valued. And if they have not done it, then it should be reported in LFR. Otherwise, it is only required for every 3 years for NPA account. So you need to check whether the valuation has been obtained, whether the report is valid, that is, it is lesser than 3 years, and you need to, if it is more than 3 years, consider the value 0 and pass additional provision for that. So there could not be any argument by the branch manager who says, "Any 3 years abhi hua hai, February mein hua hai," or it's like that, ki abhi Jan mein hua hai, the valuation is going on, stock audit is going on. That argument should not be accepted, because if he knows that in February or January valuation is going to be expired, why he has not started the process? So there could be a reason that the borrower itself not cooperating for the valuation. NPA borrower is there, doubtful, why he will cooperate for valuation? He is not cooperating, so make it 0. Similarly for stock statement, it is stock audit is required. It is not stock statement. So even if borrower is submitting, now which NPA borrower will keep on submitting stock statement to the branch? And that requires stock audit. If he is not, stock audit is not conducted and he is not allowing the stock audit to be conducted, then you should mention that why that borrower is not considered as a non-cooperative borrower. And this needs to be mentioned in LFR with the customer ID, name of the borrower and account number. And when you report it, you may report, don't only report the account number where you have found the discrepancies, you report all accounts, all facilities of that borrower. Because what happens that, I will tell you, now if you, let's say you are doing a audit in a Bangalore main branch or Bangalore branch or Hebbal branch. Now he has some, let's say he has a business account there. He has a same borrower proprietor has a vehicle loan in some other Koramangala branch because he stays in Koramangala. Now when you pass MOC, you will pass MOC only for your branch. Now you have to go in the system based on custody, you have to check how many facilities he has. And you have to make all facilities NPA. And that MOC processing based on the custody is not available in the systems of many banks. So what happens in that case? Only that account becomes NPA, and then the whole, what we always call that NPA is tagged borrower wise and not facility wise, that doesn't happen. That doesn't take care. So wherever possible, now if it is a custody based, PAN based, you go to the screen and check how many other facilities are there. In CBS there is something called Finacle, there is something called LTL. So once you go there, there is a limit report. From the limit report, you come to know that how many borrowers are in, how many facilities a borrower has, and make all those facilities NPA. Then branch manager might say that this is not my account, I will not sign the MOC. Then you say you get it signed from your zonal office. Because if it is either, even if it is not in his branch, it is there in the zonal office. No, it comes under his zone. Full amount. All accounts, including other branches. There is a RBI circular on fraud. So there is something called red flagging of account. So there are 43 early warning signals given by the bank, given by the RBI. For that, the bank has to raise the early warning signals and get clarification from the borrower or branch. It is a master circular on master direction on fraud, which you can get from website. So if you read that circular, the most of the data which has been captured by the system are objective data. And out of 43, some 23 are objective, 20 are subjective. This subjective comes from the analysis of the balance sheet and financial statements. And we have observed that many banks are not raising the EWS or red flags for based on the analysis of the financial statements. So we as an auditor will come in picture and will say we will have to mention, if we observe any of those, we need to red flag that account, and you need to ask the branch that why this account has not been red flagged, or why not this account, why EWS has not been done. See what happened that last 2 years during COVID period, you remember that our date was for the filing of returns was 28 Feb, 29 Feb. So what happened that during that period, every bank has, every branch manager has their advances. They used to say कि financial statement आया ही नहीं है. If you remember 2 years back, it was 29th Feb, the audit report. But now that issue is not there. Now all returns we have filed, we ourselves have filed all our clients' return by 31st October, and 30th September we have done our audits. So all branches should get the financial statement by this time, by latest by March. So if the financial statements are not there, you mention that in the LFR that financial statements are not obtained. And just getting financial statement is not the end. Analyzed by the branch manager or branch official is more important. Because something now, if you see our CARO reporting, the CARO reporting is actually only for bank. If you analyze the whole CARO and our NOS disclosure reporting, it is for the funds. Everything revolves around the fund. So once you analyze that, you come to know what the auditor wants to say. If auditor has qualified any of the CARO, it has an impact on the borrowings. So when the CARO, that new CARO has come, when we are analyzing in the office, we came to know that many points which are there from our forensic audit report, those have come there. It's not only from our side, but many auditors forensic audit must have pointed out those. So that's why the CARO and analysis of financial statement will be very helpful, even disclosures. Now we all are saying that company is a going concern, any of where no one has qualified. So what documentation we are taking for that, when it comes to peer review, that time only we have to justify. But that documentation is very important from a company audit perspective when we say all companies are going concern. So we also come across, I have come across, now our auditors also do certain kind of things which they should not have done. I come across during my audit, the auditor has given in comment, not even in qualification, that provision in the company is not done as per AS 15. It is mentioned in comment. So I ask branch official that why you not mention it in your sanction letter, that appraisal memorandum. He said it is not a qualification. So I asked him, boss, it is a qualification. Then I asked him, you go and get first clarification that when he has mentioned the provision is not done as per AS 15 means he has not done provision at all, or he has not done as per AS 15. Then he asked, first thing that branch official was not aware what is AS 15. Then when I told that it needs to be done, then he went back and asked, then that time he came to know that the provision itself is not done. So that language also auditor has used is good English, provision not done as per AS 15. So initially I felt that provision is mad, but it is not calculated as per actuarial valuation. But then I realized it is not done. So automatically the profit got impacted. So that thing should come in appraisal when you check the appraisal review of those accounts. And if you find such things are happening in the branch on regular basis, you can actually send a special email, specific email to the statutory central auditor, so that he can actually go through that when the returns or LFR come from your side, he can go through from that LFR in detail. So branch classification of advances into standard, substandard, doubtful. There is a list of advances with SMA and NPA status. So what we do, that is not a standard practice, but what we do normally is that we take a SMA report of January, February and December, and we compare that SMA report with whatever NPAs have been done in the March. So because any SMA 2 accounts which is in February should automatically become NPA if there is no recovery in March. Any SMA 1 account in January should automatically become NPA when it comes to March. So in that case we analyze and we check that from where recovery has come. And when you start analyzing from where recovery has come, if it is coming from like say RTGS, NEFT, we cannot do anything. But if the recovery is coming from loan given by the gold loan given by the borrower, partner को gold loan दिया and partnership को overdue clear किया, that is not allowed. You cannot evergreen by giving gold loan or mortgage loan. Two dangerous products these banks have introduced is, one is gold loan and other is loan against property. We need to check the end use, because RBI says that you cannot use these loans for investment in shares, stock and everything. But which bank is actually monitoring these loans? They are just checking, they are not even checking the credit worthiness, they are just checking what is the property value, last 3 years ITR and giving loan. What is the gold value and giving loan. So we will look into the end use of fund. So I have come across situation where they have given a loan against property to a director, and from that loan against property, they have paid the overdues of the company. And when I asked him what is this, he said it's infusion of capital by the director. So I said, what is this? You are only giving loan, and you are saying it is the infusion of capital by director. Then I told him, okay, you generate his past 2 and all those reports from the system. And when they generated in the past 2 report, it is not, nowhere it is mentioned that he has been allotted shares, nothing was mentioned. There was no new past 2 reports. So if you come across such kind of a discrepancies or such kind of a alerts which you have, see, we can do a desktop search for that company if it is a large company. If it is a smaller company, go and generate a search report on ROC. It doesn't cost much. So I have also come across certain cases where we generated a report on ROC. He has not filed report for annual financial statement for last 3 months. He has not filed MGT1 for 2 years. Then on what basis you are giving loan to that company? If he is not doing basic compliances, that itself shows that there is some problem with the borrower. That should be NPA. Only thing, it should be through cash. KCC and gold loan. Then we cannot do anything. No, we cannot go and check CCTV cameras whether that person has come or not. But sometime what happens that they route it through inter-office accounts. Gold loan. But there if they pay the cash, means they at least do the entry of the cash. You cannot do anything as an auditor. No cash entry, if that is the case, then that account should be made NPA. Yeah, rather I will give you, it's a very senior chartered accountant, he is around 70 years old. He told me when he used to do bank audit, means he is chairman of a cooperative bank. So while discussing, I asked him, how you people used to do bank audit with a manual register? I have not done it, frankly. So he said, no, it was easy than today's. You know, how it was easy than today. So we used to go to the branch. We used to take a lot of register. Once I came across a branch, there was agri loans which are there for overdue for more than 5 years. So I make him that you make all these loans NPA. So he said, sir, if that is the case, then he said I started writing MOC with the name. So then branch manager said, this is one ledger. In those days, I think there were ledgers. This is one ledger. Like this, there are 5 ledgers. So instead of mentioning name, it will just take time. I will give you the total of the ledger. You write ledger 1, ledger 2, ledger 3, ledger 4, and make a MOC. So so he was saying that you people actually get too much bogged down by the technology. You see the actual go to the drawing board and do audit the way we used to do, you will get a lot of things. So if gold loan, seriously, if it is not through cash, agri KCC loans, if it is not through cash, make those accounts NPA. Also in North Karnataka, there is a concept called H&T loan. This is in Belgaum, Hubli, Dharwad area. These loans, for sugar cane, sugar factories. Yeah. So these H&T loan, these are not actually given to the farmers. These are given to the harvesters. So the concept is that those harvesters teams who come for cutting the sugar cane and delivering in the sugar factories, this is actually very local loan type, which is only in North Karnataka and Western Maharashtra. In the sugar belt it happens actually. And there, these loans should be, these are 1 year loans, so one season to season. But these are not crop loans. So KCC criteria of short term, long term crop will not apply for this. These accounts should become NPA on the 90th day. So if any one of you got those areas audit, be careful about these H&T loans. And these are loans are given in small quantity pertaining to a sugar factory, and the number is huge, and they always default. Then details of accounts, upgraded, downgraded, you get a report from advances dump. There is various report, like in Bank of India, there is a report called CCIS. In Canara Bank, there is a MIS RPT, something is there in FlexCube. From there you get this report. So if you get these reports for last year and current year, do a VLOOKUP, you will come to know which accounts have been upgraded, downgraded. Also you can get similar report for any date, like month end, these reports are available in Banks 24 also and FlexCube also. You can go through this report, do a VLOOKUP, you will come to know, and whether this has been properly mentioned in your return. There is a return called movement of NPA, movement of provision and NPA. There whether it has been properly reflected, you see that on also if there is discrepancy mentioned in LFR. Then there is a circular of RBI for 7 June 2019 which is to stress asset. So these are basically applicable for loans which have total banking exposure more than 1500 crore. Total banking industry exposure. So if you come across any large branch, you will have this kind of a loan. So there is a report from CRILIC is generated, which gives that whether that account is in default, out of default. So any account which is in default to any bank for continuously more than 180 days, there is a provision requirement of 15%. And if there is no action, there is additional provision of 20%. So total provision requirement is 35%. So if you come across such account, then please look into this account and please make provision if bank is not making. Bank says that we are making at HO level, then you get a confirmation from HO that provision has been made. Branch follows the RBI guidelines for income recognition that we normally check. I will go to one more area. This is related to CGT SME and ECGC. See, there is a scheme called CGT MSE and ECGC. ECGC is for export financing, CGT MSE for the small and medium enterprises. So in case of CGT SME, first we need to check whether that account is now also a small and medium enterprise. So we need to have, means you need to check whether Udyam is available. And financial statement, on the financial statement front, means face of the financial, we will come to know whether it is a small and medium enterprises, that need to be checked. And when that account become NPA, there is a guarantee given by the central government with respect to reimbursement to the bank for that of the loan. So there is something called CG PAN given by the central government for this, by the trust, this central government trust for small and medium enterprises. So every account when there is, so the, and we all come across these accounts in all mid or small size branches because many of these loans are guaranteed by CGT SME. So what happens in this case, once that account become NPA, the bank needs to file a claim, then government gives a 50% of the amount of the total loan as first in the immediately. That needs to be parked in any other asset or a sundry account, and after 3 years, if that account is proved to be non-fraudulent, then again government gives the balance 50%. So we need to check when they are getting the benefit of the CGT MSE or ECGC, whether the claim has been filed with the government, at what stage the claim is, and whether the first tranche has been received by the government in case of CGT MSE. Because when you will come across this, what we have observed that CGT SME claim file kiya, government has rejected the claim. Still also they are taking this as security. And this should be taken as guarantee in the system CBS and not security. This is in addition to security. So when you check this account, please go and check the masters, and in the masters where this has been mentioned as guarantee or security. If it is a guarantee, if it is a security, ask them to pass MOC and change it from, make that account unsecured and put it in the guarantee. So review the security from that. Similarly for ECGC, ECGC is a export credit guarantee. So export has been made. If there is a default, whether there is a claim has been filed by the bank and for how many years it is pending. If it is pending for more than 1 year, because ECGC is supposed to give payment within 6 months, if it is pending for more than 1 year, you mark that as a, you don't consider it as a guarantee. And you don't consider that value, because if you remember provision calculation, ECGC and SME gets a benefit. Branch has complied with recovery policy, that is more not that important. No action taken by branch in case of where controlling authority of bank has authorized legal action. So this is in case of loan accounts where controlling authority is told to go under surface, the branch has not done it, that needs to be reported, so you need to go through the correspondence file. Then this is a direct report available, details of LCs devolved and guarantees invoked. Then there is something called details of interchangeability between fund base and non-fund base. This is also used for evergreening of account. So they say that total CC limit is, let's say 10 crores, VG limit 5 crores, and we allow the interchangeability. So when CC is actually getting overdrawn, they immediately say that we have transferred it from the non-fund base to fund base, and they regularize that account. And if it is happening on regular basis, that account should be marked NPA. Means that branch manager will argue tooth and nail when you start saying that account should be marked NPA. So what strategy should be? We should start telling them before closing, or 1 day before closing, that we are marking this account NPA. Otherwise, what will happen? He will unnecessarily start wasting your time, taking you to lunch. Every one of us must have experienced that. Then list of NFB change and FB supplemental devolvement should be mentioned. And this interchangeability, when what assessment has been done by the bank needs to be checked in case of interchangeability. What we have observed, that same assessment is done for the fund base also, non-fund base also. That is not correct. There are certain basic difference. We are chartered accountants, we know that what is the difference between a fund based requirement and non-fund based. We also do for our clients. No? So if a contractor requires non-fund based only, then we need to seek non-fund based. His requirement non-fund based. Why you are giving him CC limit? But if a trader requires CC, why are you giving him non-FB limit? And that should be questioned in credit appraisal itself. That query should come from our side as an auditor. This is I have already discussed. Usual, unusual Raj movement in the deposits after year end, that needs to be checked. This I have very bad experience of this. I was concurrent auditor in one of the bank, and there was an account of a PF, some company's provident fund account. Normally there are from those accounts the withdrawal, trust provident fund were there, no, of that. Withdrawals are done only for the purpose of paying it to employees. So one account of that same branch was overdue continuously, and we used to make comment every time in the concurrent audit report that this account is overdue, and he used to just managing like 88 days, 89 days. And what happened that on specific day, on 31st March, they told us that now statutory auditors are coming, so you don't come for next 10 days. And then we said that there will be penalty and all those things. So they said, no, that we will manage, you don't come for 10 days. And they have sent email later to that zonal office, and zonal office confirmed that okay, let them not come. So we stop our audit on 26th, 27th March, and the statutory auditor came. These people, this branch manager was so smart. I don't know whether it's his brain or some other senior's brain. He has transferred his debited this PF account, because it was no one looked into that account, and transferred the amount to that overdue account. Both are unrelated parties. And that account went through. The statutory auditor also could not identify that the way they have done it. When we restarted our audit after 15th April, we came to know that. And fortunately, that branch statutory auditor was central auditor, so he has not signed that branch because he was in a hurry. So he said, I will complete and then I will come back to Mumbai. That time I will do all sign off and everything. So by his luck, it was not signed. And what happened that I know him personally, so I called him and told him that this is the case, and they told that you have closed the account, you have closed the branch, means audit has been closed. So he flew down wherever he was, he got so serious, he flew down immediately in that night, he went through the account and marked that account as NPA. That's why this movement in deposit account is also very important. When we look into this deposit account, we always, what happens at 95% time goes in advances when we do the audit. And after in given balance 5% time goes in signing, hard copy signing. Now fortunately many banks have done away with that. Otherwise, I don't know how many trees we used to cut for bank branch audits only. Now DSC has started. So please look into these areas also. Then dormant to inoperative, these are also accounts which are prone to fraud, and if you go through, if you just generate kind of a Google it, you will come to know that how many frauds have been done through dormant, inoperative or deaf accounts transferred today, because no one looks into these accounts. There is a report which is generated on daily basis where the accounts have been transferred from dormant to operative. These are related to certain foreign currency accounts. So whenever there is a transfer from FCNRB to normal account, there is a FEMA requirement like a transfer repatriation, whether that has been taken or not. Then contingent liabilities we need to see. We need to check that what are legal cases against the bank, and we need to actually mention it in the contingent liability. Because what happens that bank, say branch manager says that everything is looked into zonal office, legal cases I don't have status. That cannot be the answer. He has to take the status from zonal office. Because you are certifying that a branch. So if a case is pertinent to that branch, that should come in his return. Profit and loss account, income, whether it has been properly calculated. So if you, on sample, if you check the masters, you will come to know, you will be able to identify this. So major divergences need to be reported. So these are gold related items. We cannot go and open the gold packets. We can only check the number. 100 loans है तो 100 gold packets है कि नहीं. And some auditors have the enthusiasm to open the gold packets. I also, because we also get mail that they are not allowing us to open the gold packet. Actually, gold packet should be opened in the presence of the customer only. And we should not take responsibility to identify whether their gold is real or not, even if their gold packet is opened. So we need to see the joint custody and excess short stock that needs to be reported. Any of the software or system used by the branch which is not integrated with CBS. This is very important. This has come from the SWIFT, but still there are certain systems or software used by the branch which are not integrated with the CBS, that needs to be reported. And if you find anything like this in the bank, don't wait for LFR, closure of finalization, call the statutory center auditor and tell him that this branch is using this software which is not integrated with CBS, because he is doing a GITC audit there at HU level. Then he will take that software in his whole aspect of GITC, ITGC. Adverse remark in IS audit, see that the adverse remarks, whatever in IS audit, you mention all open remarks in your LFR. Internal audit, concurrent, all open remarks should come in LFR. IS audits have, some branches have. Then what is the manual intervention and audit trail for such intervention is obtained. So this is majorly you will not get this at the branch, because the audit trail is at database level, so that is not the branch level. So and branch cannot do any manual intervention also. Then data integrity is basically what is inputted in the system that needs to be checked. This I have already discussed. This is very important area. Please look into this area very seriously. This is going to be a very important area for RBI in this year. Any frauds detected by but not reported to RBI should be, as per the circular, within 1 month fraud should be reported to RBI, based on their understanding of the business of the customer. Now what we need to see that whether they have called the customer, they have got information from the customer, and after that they have closed this. And that is the responsibility of the branch manager, only of the branch manager, to see that alerts are closed properly. So branch managers are not closing alerts properly, please mention the same in the LFR clearly, because this is very important area. Tomorrow what happens if that in that branch, If you come to know something that huge cash is deposited, which is a stolen cash, or a gold loan has been taken against a stolen gold, everyone can be questioned, from statutory auditor to branch auditors. So please mention this. Then comments related to various audit report needs to be mentioned. Then foreign exchange branches, I have told that FEMA guidelines needs to be reviewed, means understood. And if you don't have expertise in FEMA guidelines, if you are not done it, you can call your fellow chartered accountant who has done it. It's my request that you need to take help. We do need make branch audit effective, and it should be there. We need to help each other, and you get him and ask him that what are these guidelines, what is the key points to be checked. There is a concurrent audit of bank branches. There is I think it is available now on website also. In that there is a very good checklist given for these foreign exchange branches. You can use that. Branches in clearing house, nowadays banks are not allotting this, because this is more a kind of a centralized process, automated process, not like earlier days, because now checks are also not available with the clearing branches. Now it is a scanned copy which comes to them. Branches dealing in recovery of NPA. So this is very important. This is very important from the perspective that age-wise analysis of recovery of suit filed, and if any whatever order which they have received, whether they have executed that order. So they have said that the attachment should be carried out, whether the bank has carried out the attachment or not. That needs to be checked. All FB and FB account of a new borrower transferred to the branch along with all his documents needs to be checked. Whenever there is a transfer from active branch to NPA branch, everything should come to the NPA branch, including NFB accounts and pending fees. So in case of a LC, if the fees are amortized over the period. So if in other liabilities of that earlier branch, the pending fees are there which are not unamortized, that should also come to this branch, so that this branch can amortize over the period. So this is from my side, and we can discuss queries or questions if anyone has. No, you have to include the current year advances and large advances. See, you have to include the what advances should be included is mentioned here in the LFR itself. I will go through that. See, it is clearly mentioned accounts whose outstanding amount is more than 10% of the total advances, non-fund based plus fund based, or 10 crores, whichever is lower. And for below the threshold, you have to do a process test, process audit. And above this, you have to do a transaction audit, and you have to check these accounts more than 10 crores or 10% of the. So if a bank, let's say branch advances are, let's say 86 crores. So whichever advances which are more than 8.6 crores, you have to check it. So if there is a smaller branch having advances of 50 crores, so whatever is more than 5 crores, you have to check it in detail, and below that threshold. So that is also given in RBI circular.
Confidentiality problem.
There is a confidentiality problem. Actually, I have not confronted on that at that point of time, but it will not be correct to upload such data, because if it includes client PAN, client Aadhaar card,
So a lot of data
then
we are uploading.
it is not correct to upload it on the cloud. Yeah, but frankly, I don't agree with that. So to avoid that, we use a software called IDEA. There is a software called IDEA, which is for bank audit, which is good software. We can use it. IDEA.
Even in Excel, you can match.
Yeah, in case of a smaller branch, we can do it on Excel also.
You can match.
Yeah, if you have good laptop with good configuration, small size bank, you can do advances.
In Excel, no, the data integrity issue will not come.
Yeah. In IDEA also, it is not a cloud-based software. In Excel also not cloud-based software. But I personally feel that we are sitting on data of someone whom is not related to us, like PAN number of someone or Aadhaar number of someone, that cannot get uploaded on the cloud.
Sir, one question regarding calculation of fee. Sundry creditors are more than stock.
Hmm.
So paid stock is zero.
Hmm.
Whether we have to, the difference between paid stock and sundry creditor, whether we should deduct from sundry
No,
data.
no, no, no,
No, no.
no, no.
Actual turnover
Hmm.
would be different from projected turnover.
Always.
So what would be the margin that or difference that we can variation that we can
No, there we cannot accept the variation. That is a judgmental based on the turnover. I will tell you in stock statement what they do, that they take a stock statement of 29th March. And if you try to match it with the balance sheet of 31st March, it will not match, and they will give argument that it is of the 29th March, balance sheet is of 31st March. You will see lot of cases where stock as per the audited financials and stock as per the stock statement and debtors as per the stock statement will not match.
no, even in case of turnover, what I'm saying, projected turnover and the projected actual turnover. So in case of CC or CCOD, if they give a 20% of the turnover, the limit, in that case, whether we
And
can,
no, but I don't think there should be any margin. We can say 10% there can be a error, but more than that needs to be reported, because if they are giving very gloomy picture for the taking more CC limit and then they are not able to achieve it, that needs to be mentioned.
Sir, another common thing is, in working capital, an account which is not reviewed beyond 180 days, we have to classify it as NPA.
Ah.
But in most of the branches we have audited, branch managers won't allow, they have asked us to what is
No, no, you mark it as NPA. Because if it is not done, IRAC automation tool marks it as NPA.
So they will ask us to report in LFAR, but not in.
No, no, no. MOC should be done. That's what I'm saying. MOC can, LFR is not substitute for MOC. It has to be marked as NPA. See, on off the record kind of a thing, we need to give more MOCs to substantiate the importance of bank branch audit.
Sir, in some cases, they change the sanction limit date in the system, but not, they don't have the sanction limit.
That needs to be mentioned. That needs to be mentioned. I have also come across such cases. This non-fund based, fund based interchangeability, they use it invariably to save the account. See, that is the reason, even if you see our UDIN, they have mentioned this number of MOCs given by the branch auditor. While generating UDIN, it is mentioned. You have to mention that. Any other query?
Sir, regarding asset recovery branch, any specific guidelines?
Asset recovery branch, basically security value needs to be checked. And whether it is stock audit is conducted, stock statement should not be accepted. Stock audit should have been conducted within 1 year. Valuation report should be within 3 years. And second thing, we need to check that the valuation report, whether it is gone down by 90%, 50%, we have to make it directly doubtful loss. And second thing is that if the suit means decree has been received, let's say under surface E, then whether attachment has been done for the property or not. Because what has happened that branch managers are local, so they kind of delay the whole attachment process, possession of property process that we have observed. Even though the zonal office could have got the decree, because of certain local pressures, they delay the process. So, and if the attachment is not done, that should be mentioned in LFR. That has to be done. If there is a decree, the decree has to be executed. It depends on the bank policy. If you see the significant accounting policies of the bank, you mention it is mentioned whether it is amortized over the period or it is upfront booked.
Sir, any revenue leakage you have to report?
Yeah, if there is a material revenue leakage you observe, then it should be reported. It should actually MOC should be passed for that.
Sir, only one UDN has to be generated, no? For all certificate, including statutory audit report.
No, no, no. There are guidelines for certificates and by I think stat audit report you can have one UDN, and no LFR and stat audit report LFR and certificate one UDN and tax audit separate UDN.
Okay. But tax audit has been removed, I think.
Yeah, in certain banks they have removed, certain banks wherever they are continuing.
Okay.
And there is a UDIN portal also, there are guidelines, means about this.
Okay, thank you.
He removed now.
Some banks are stating that the branches will not give management application letter. How do we handle that?
No, that has to be obtained. Two things banks are not giving: engagement letter and management representation letter. MRL has to be obtained. What? Which bank?
Categorically mentioned in the
Huh?
appointment letter.
No, no, then you speak with your statutory central auditor. They cannot mention it. What? MRL?
In the appointment letter, they mentioned that management representation letter will not be given by branches to the auditors. Only the head office will be giving the statutory central auditor.
No, no, no. For you, it is a separate unit. Auditing unit as per the our peer review guidelines also. So you need to have MRL. If something like this mentioned, please bring it to the notice of the statutory central auditor. This Rodi Dabir is there. No, I will also speak with Ashish. Who is auditor? Statutory central? I think Rodi Dabir is one of the auditor. I will speak with the partner. I will tell him that this query has come. I know him. Hmm? Their internal financial control is very important because all sanctioning is done at SME hub and retail hubs. Documentation is required. No, documentation is done by them only. If the documentation is done at the branch level, then documentation is not required. If they are doing documents and storing it there with them, then checking of documentation is important. Any query? Now I have a query. How much time it will take to go to airport? In Bangalore, I am very worried.
CA Nilesh Joshi, sir. Thank you so much for taking your time out and then enriching our members with all the information on LFR. May I request our chairman to hand over a token of appreciation to CA Nilesh Joshi. Can we have a big round of applause to CA? Thank you, sir. We thank you on behalf of Bengaluru branch again. Thank you. It's also time for me to give the vote of thanks for the entire seminar. I would like to thank our chief guest Santanu Majumdar who came on the busiest day, our CCM Kota Srinivas, RC member and SIRC chairperson Geeta Ebi, and all the speakers who have enlightened our members during the day. Also, the venue providers were also caterers, the Hotel Grand Magrat, AV Services and Stage, Raksha Enterprises. We thank you for, on behalf of Bengaluru branch, for all your support. This event couldn't have been pulled out without our staff. And the most important is the delegates who have actively participated. Thank you to all of you, each one of you, for actively participating and taking up this registration. So, Kavita Parmesh, Secretary, signing off. We'll see you in the next event. Thank you.